Yes, Mr.
Okay.
Asif, you can start. Mr. Riaz, would you like to actually say something as an opening remarks?
I will transfer to him. Just let me start. Okay.
No, first, because he said that we will.
Okay, it's fine enough. Then Mr. Riaz, please.
Yeah, Assalamu alaikum. Welcome
Alaikum
to
salam.
all of you for this another webinar. This time we are discussing on open banking, which is one of the new topics which is coming up.
Sorry, Mr. Riaz. I mean, I would like to just know that, like, are you okay with the opening remarks? So then we will go on air first.
Whatever,
All the participants.
or I can do the concluding one. I'm fine with that.
Okay, perfect. So Sharina, we can start now, and Mr. Riaz will go first.
Okay, Mr. Riaz, sorry, you can proceed. Sorry, yeah, go ahead, please.
Bismillahirrahmanirrahim, and welcome to another webinar which Alif Technology and NIBAF is launching. And this time it is on open banking. Open banking is one of the topics in the recent past. It has been worked a lot in developing as well as developed world. A lot of countries, developed countries, are also working on it as we are talking now. And there are a lot of changes which Pakistan is also working on it. Obviously, with the fintech coming in, the different platforms, and in Pakistan, we have already launched RAS, which is the micropayment gateway, which will facilitate these types of transactions. So open banking will facilitate, and it will open new avenues for banking, lending, as well as borrowing and other banking transactions. So this is, I'm very interested in listening to all the speakers, the panelists, so that it can benefit to us. And thank you very much, and welcome to this program.
Thank you very much, Mr. Riaz from State Bank of Pakistan, and for this interesting webinar. Hi and assalamu alaikum everyone. Welcome to the Alif Technology e-learning series. At Alif Technology, we always strive to bring for our participant discussion of latest technology update and trends around the globe. Alif Technology and NIBAF welcome you to this webinar with the collaboration of ICMA Pakistan. And this already, Mr. Riaz Sunara have already mentioned that this is the opening, this unleashing the potential of open banking. Open banking is revolutionizing the way we know banking today. Under this concept, bank open up their APIs for third parties to develop new apps and services, providing better user experience and highly customized product. In progress differ by region, but its demand and use has been further expedited by the COVID-19 pandemic. More banks are embracing an end-to-end digital architecture to compete with each other and remain relevant in the future. This webinar will explore the concept of open banking, its pros and cons, and the latest advancement, regulatory challenges, and compliance issues and future directions. For this program, our moderator is Dr. Farooq Habib. To you, Dr. Farooq.
Thank you so much, Mr. Asif, and it's a pleasure to have all of you in this webinar. I think that without further ado, I would like to call upon our first speaker, who is Mr. Leslie Gonzalez, and he's Enterprise Solution Architecture in Wisage G Limited, which is based in the UK. So Les is a progressive technology expert with extensive experience within banking and financial services, defining payments and regulatory solutions architecture, and promoting fintech innovations. He's knowledgeable and innovative, and well-positioned to advise on transformation and institutional challenges to help develop pioneering solutions to the real problems facing fintech startups. He's empathetic and inspired and passionate about children's special education needs and support as well. And I would like to welcome Mr. Les, and he will be talking about open banking as a general idea, and then explaining that what is that open banking, and touching on the issues like what are the basic difference between an open banking and traditional banking, and what are the opportunities and threats on open banking. To you, Mr. Les.
All right. Thank you very much, Dr. Farouk. Good afternoon, everybody. Assalamu alaikum. I will share my screen and let me know if you're able to see. You're able to see, everybody? Asif, Farouk, you're able to see the screen? Farouk, Dr. Farouk, are you able to see my screen?
Yes, we can see your screen. Perfect.
Okay. All right. I'll kickstart. Okay. So today I'll be talking about open banking from the perspective of the UK and Europe, and what are the changes that we have seen in the last decade, and also what are the changes specifically when we talk about open banking. Okay, what is expected? So we'll talk about open banking from, also we'll just go a bit in the as a background as to where open banking came into the picture. Okay, and we talk about PSD2, the Payment Service Directive, which is an European initiative. And then we talk about the open banking features. What are the key features that when somebody says we are open banking compliant, what does it mean? Okay, then we'll have a quick look at the traditional versus how business is to be done in a traditional aspect of banking has against in today's digital world. And then we'll look at what are the opportunities that are there. Okay, so let me start with just a brief background. PSD2 is the Payment Service Directive. It's an European initiative. There was PSD1 that became a law in 2009, which implied that every bank in Europe, including the UK, will allow for a SEPA payment, that is a single euro payment area. That means a bank in UK can transact euro currency to a bank in Europe, to any bank of Europe instantly. Okay, so there was debit, SEPA debit, and those are the two payment schemes that were introduced, and every bank had to comply with that, and there was no fees that was associated with that. So that was the first directive that came in 2009, and then they followed that up with the PSD2, which implied that how all of the what are the opportunities that will be available for various fintechs and innovation. Okay, so basically the intention was to ensure that the innovation can come through, banks open up, and more smaller players can also come into the market, and at the same time the customer, the end user, is able to have much better access to the funds and much better access to the banking products. Okay, so that was the intention behind PSD2, and that came into force in 2018. And if you look at it, the PSD2, which is the European directive, that sets the rules and regulation as to what should happen. Now, the implementation of it is different by different countries. So there are about, I think, 7 to 8 implementation of it. UK has this UK open banking, which is enforced by the CMA, Competitive and Market Authority of UK. Then we have in Europe, we have the Berlin Group. It is a consortium of a few banks in Germany. Then we have in France, the state, STET. Then Poland has its own interpretation of implementation of PSD2. Bulgaria has its own. Nordics, Netherlands, Denmark, and those countries, they have their own. So there are different way the directive set out by the European EBA, or European Banking Association, is getting implemented in different countries in Europe. Okay, it is most of the countries align with one of those. Okay, but there could be some countries who will follow a certain way. Okay, but in essence, the key aspect, if you look at it, is everybody should have access to accounts. Okay, the customer should have access to his accounts, which might be in different banks, and they should be able to get it in one consolidated dashboard kind of thing. One should be different new entrants, like where there is an third-party providers can also access the accounts. Consent management is a big thing, that a consent from the customer that yes, the third-party provider can access the account. Then there should be a strong customer authentication. Okay, so authentication and authorization should be there. Okay, and we'll talk briefly about that. And then there is a common and secure communication. Okay, so these are the 5, we would say, the key areas when somebody says I'm open banking compliant. They need to ensure that they have access to account. There is a strong consent management and strong customer authentication are the 2 key features. Okay, out of the 5. So let's look at just the history, how it started. As I said, in 2009, it became a law. But when you see the trajectory of what has happened with the introduction of PSD2 and how cash and card usage and instant payment usage has changed. So in 2009, a lot of cash transactions was happening. 2015, it started reducing. Cards started taking over prominence. And then by 2018, we could see online payment, instant payments taking traction, gaining traction. And it is predicted by 2027, we will have more of the instant payment and less of card payments and those. Okay. Now, if you see, when we talk about open banking, it is not just about data in the sense, yes, the banks are exposing certain information to the third-party providers and to the outside world. Okay, but it is not just about data. It is about technology also. It's about open APIs. Okay, having an interface or a hub that allows outside world to interact in a common manner. Okay, it is about bringing in a greater financial transparency, but also about introducing a lot of banking products to the unbanked customers. Okay, the ones in the villages or the ones who cannot get the loans. This open banking allows that to happen and those products to be available to them. Okay, then we are saying that it's earlier banks used to have the control about the entire data. It's no more the case. Okay, with PSD2 or open banking, we are saying that it is an innovation-led competition. Okay, it's a level playing field. Okay, it is also by sharing the data, there is more choice for the customer. So in the end, the real benefit has to be for the customer. So that is and also to bring in competition. So as I said, in the UK, the open banking adoption or the PSD2 directive was enforced by the Competition and Market Authority, and it got about 9 big banks, Lloyds Bank, Santander, HSBC, Barclays Bank, NatWest, RBS, all of those banks to open up their API or their data so that there could be more competition, more smaller players can come into the market. Okay, and that's where you have the fintechs, whether you have the fintechs like Monzo, Starling Bank, but you also have fintechs like Thought Machine, you have fintechs like Finacle, who are able to access that information provided to the end user. Okay. I will also share these slides, but also have got some links that I have what on the slide that will give you some access to the open banking specification, and it is a very good specification. And all of the, in my experience, in all of the implementation of PSD2 open banking in the UK, they have got a very rich specification. They have gone to the detail of what should be the how the API should be structured, what should be the attributes they should share, which are mandatory, which are not, all of that. So it's a very good collateral over there. You can see open banking being implemented almost all over the world. Okay, there's US, UK, Europe, Asia, Australia. There are, in fact, Asia is, in a lot of cases, Asia is taking, in terms of fintechs and open banking, is taking the lead in introducing banking as a service. So a lot of traction in Asia and Southeast Asia. We look at, I also want to talk about, when we talk about open banking, some of the terms that are there. Okay, so we just we talk about open banking, we talk about providers. And one of the aspect of open banking or the advantage was to allow for fintechs or new players to come into the market to have their solution and present it to the and be the interface between the customer and the bank. So they are third-party providers. And when we say third-party providers, they would be AISP, which is an account information service provider, and I'll talk about that, and a PISP, which is a payment initiation service provider. So let's say if I, as a customer, I have an account in 3 banks. I have got my mortgage account or my house loan with Barclays Bank. I have got a salary account with Lloyds Bank, and then I have another credit card account with HSBC. Now, if I want to know the status of it, I have to go to each bank individually. The account information service provider is a, let's say, could be a fintech, or it could be a bank that would say that, okay, on behalf of the customer, I will get the information from all these 3 banks and present it to you, to the customer. Okay, but for that to happen, the banks have to give me some APIs that I can access easily. Without me, when I as an AISP access the bank's network, I should not cause any distraction or disturbance over there. So they have to expose an API which is easily can be consumed. Okay, but then I can information presented to the customer. But along with that, I can also, as an AISP, I can also project some additional products, like saying that, oh, if you go with, given that you have got this much cash, you could also have a, buy a car at a lower interest rate, and these are the products that are there. Or if you wanted to invest in some business or trade or stock, these are some opportunities. So the AISP then has opportunity to present to the customers various products or flavors of the product. Okay, so that because of the information they can gather from the various banks. Now the payment PISP, or the payment initiation service provider, is another fintech who are saying that if I want, as a customer, want to make a payment to Asif, okay, who's banking somewhere else, and I owe him £10, I would have to then go to the bank, or I'd have to do it online payment, and I would have to initiate that. Alternately, I could have a payment initiation service provider who says that I will take care of all the payment and handle their interaction with the bank. So whether I am making a payment for a monthly recurring payment that I need to make a payment for my council tax, or I want to make a payment for my water bill, that I can manage it through the PISP can say, hey, I will manage it for you. You don't have to worry. I'll take care of all the transaction behind the scene. And it's, in many cases, it's free. Okay, but it is giving me a list of all the information as to what is from which bank account it is coming, what is your um, um, uh, whether you're going below the threshold, whether you're going to be in the red. So it's giving you a sort of a personal financial PFM, a personal financial management information. So that is the other bits that they can do. And the AISP, which is the account servicing payment service provider, is the bank who holds all the information and the data. And in some cases, the bank can also be an AISP. That is, they are providing the account information to the rest of the world, okay, or to the customers. So we talked about, I talked about two things earlier, or 5 points or aspects about open banking. We talked about account access, consent, strong customer authentication. We talked about level playing field. We talked about communication, secure communication. But two things I said was consent and strong customer authentication is very important. And we look at consent here. And there are quite a few directives when PSD2 came out in 2018, but when they initiated that in 2015, they had some articles like 65, 66, 67 that deals with what an AISP should do, what a PISP should do, what is the consent. So those are the articles that are there. I'll share the link for that. But what we are saying is, what does the consent mean? That the customer is giving the permission for the bank where the customer has an account to release certain information to this fintech or to this AISP so that they can get a consolidated view of all their accounts spread across different banks. Okay, so it's just consent and saying that I give the permission. Okay, so that is in effect what it is. Okay, and how that consent happens is through a strong customer authentication, whereby when I tell AISP, yes, you can go ahead and get information from my bank in Barclays, it will tell the AISP will go to Barclays saying that, yes, I have got the permission to get information of Leslie. But the bank will come back to me saying, did you give the information? So the bank is not going to back to the AISP and then the AISP is going to send that information to me. The bank is directly contacting me. It could contact it over mobile, it could contact over email, it could have different ways, and there are different modes of authentication. But it is doing that once that has happened. And it could be a fingerprint, it could be a password, or it could be a card that I use to authenticate. I could use various methods. But that strong customer authentication has to happen. That does not involve the AISP. It is happening outside of the communication of the customer with the AISP and AISP with the bank. It's directly between the bank and the customer. Okay, so we'll talk about that. So this is just a sort of when we talk about PSU, the individual, the payment service user, who is saying that, okay, he's talking to AISP, saying he's requesting the information. The AISP goes to the bank and sets up an account request saying that give me the data for this customer. But the bank will go and get the consent from the customer before it releases the data. Okay. Now there are other things that is happening behind the scene, whereby the bank is having a central directory whereby it will go and check whether this AISP is registered or not. Is it a legal entity? Is it authorized to do what it is? Okay, is it? It has to be regulated by the Financial Conduct Authority or somebody. So all that has to happen. Once they have authenticated that, yes, we know this AISP is a valid AISP, then they will say, I need a consent. So that also happens behind the scene. And this is a link that talks about how it talks about a lot of various attributes, parameters that are there. It has got a good Swagger file, everything. Okay. I think I need to run quickly. I'll run through this. And this is basically what we talked about and what I explained as to what the AISP does. And then we talked about the AISP being regulated. Okay. And they are in a directory called EIDAS. Okay. Then I talked about the PFM, which is the personal financial management, but this is how the aggregation happens. The customer will request the information from an account aggregator or AISP, who will go to different banks where the customer has an account and get that information from those banks and present it to the customer. And along with it, it can also, based on their relationship, they can present some more banking products or different insurance products. But this is where the banks will go back and check if the AISPs are regulated or not, and it will do the checks over here. And this has to happen over as we talked about, the strong customer authentication and the consent come between the bank and the customer happens away from the AISP. It happens it's like out of bounds, they call it. Okay. And we talked briefly also earlier about the PISP, and this is everything that I mentioned earlier, that it is to do the initiating the payment on behalf of the customer. Okay, so if you look at Google Pay or Apple Pay, they act as a PISP. So when I register my download a Apple Pay or Google Pay, I am registering my bank account with that. And when I go to buy a coffee and go to the coffee shop and make the payment, I am authorizing Google Pay to make the payment to Starbucks. Okay, and they will then initiate the payment from my bank account to Starbucks. So it does everything behind the scene of making the request for payment. The payment will still be done by the bank in terms of transferring it to the merchant. Okay. And over here, it's the same thing as we talked about. I described the customer will go to a retailer, to a coffee shop to make a payment, to buy something. It will go to the initiation service like Google Pay or Apple Pay or other fintech. They will go to the customer banks and ask them to make a payment over the payment network, and it will go to the retailer's bank. Okay. This is a very simple representation. Okay, there is a big, a lot of communication does go through, which ensure that this a secure. This number is more about ensuring that the consent is, and there is a strong customer authentication. And this is again another version of it, whereby the PISP will, once the users make a payment, the PISP will go to the bank. It will set up a payment order consent. So that consent will get approved by the authorized by the funds will be confirmed. The payment will be initiated by the bank to the retailer's bank, and the payment will happen. And the details of that consent, details of the status of the payment will come back to the PISP. Will send it back to the user. And again, this is a link. It gives it's a good exhaustive documentation. One of the things we wanted to talk about is like how we used to do it traditionally and what we are doing in the new world. Okay, with open banking. So traditionally, if I wanted to get some information about my accounts in a bank, as a customer, I would go to every bank's online portal. I will go or I will go to its aggregator and try to get all the information I need for every bank. So I would have to go to, there will be so many, this aggregator will have to go, or this aggregator is nobody, but it could be the bank's aggregator. So I'll have to go to every bank and get my information and try to put it in an Excel sheet and do that. Have one view about all the accounts that are there. In today's world, this will be done by the AISP, and it will be done by the AISP because there are APIs that the banks have exposed. And so the banks, when they expose the APIs, what are they doing? They are not exposing exactly what happens behind the scene, because that is very much pertinent to what happens there. So it gives a sort of I would say, a covering or a blanket over their core API. And with that blanket is what the AISP can call. So AISP will say that get account for Les. That's all it will say. Internally, this AIP, there will be a translation happening through a gateway, API gateway, that will say that, okay, when you say get account in brackets number 1 2 3 4 5. What it actually goes and does, it does three things and gets that information. It will go and get the permission. It will go and look at the profile of that account. It will look at a lot of things and then say, okay, it will do some sanction checks if required. And then it will say, okay, I can send the information to the AISP. So this, but it becomes easier. What also it becomes easier is this AISP will need not, the customer need not go to every bank where it has an account to get the details. It can go to one-stop shop. It will get it quickly, okay, and easily. This is from a payment perspective, very similar from a payment perspective. We are saying we have got a customer, we got a merchant like a coffee shop, and this is what I would have done in the early days. We would have gone to a facilitator like a card payment like MasterCard or some other the card providers. There would be somebody who is actually initiating this, managing the card payments, and then it goes to the bank. In today's world, I have a PISP. The PISP will go and access the APIs of the customer's bank and initiate the payment, and the bank will transfer it to the merchant's bank. That's it. So PISP will tell the bank, okay, this is make a payment for this customer and for this to this merchant, this much amount. The custom bank will go and validate whether get the authentication, the authorization for the customer, and send it back to the bank, to the merchant's bank. So if you look at how it is transferring, and if you look at, you know, earlier somebody mentioned about how things are changing in the lending space. And if you were looking at what happens with the traditional banking, if I wanted to get a loan, I would have to fill up a lot of documents, send it to a bank. They would do their own checks. And then before they agree to sign the contract, give the approve the loan, sign the contract and give the money. And for every bank, I'll have to do the same thing to see if I'm getting a better deal with one bank or not. And I'll have to do the same process. And it will take months before I get a loan. And today, I can go online, I can do a comparison site. It will give me some information as to what are the various loan providers in the marketplace. I will say that, okay, I choose this. It will then direct me to that particular financial lending bank, and they would have my personal data, and it will happen quickly. Okay, so that with open banking, given that every bank has opened up their APIs, this comparison site can access those information. Okay, and that is available. And with the client's consent, it can then straight away say that, yes, I want to sign up for this particular loan from this particular bank. Here is my information for the credit check and background check, and it's approved. So it's like becomes like a one-stop shop, and it's faster. So this is, you know, one of the advantages of open banking. We'll just look at a transaction example very similar to what we did when we looked at the PISP and AISP. But over here, we're talking about the authentication and authorization that is happening. Okay, when the customer initiates the transaction, it gets a request to the bank to authenticate. The bank will send an authentication code, but this authentication code only comes back when it is authorized. When it gets the consent from the customer. Okay, and is authenticated that customer. Then he says, okay, I'm going to now give you a code and authorize you. And based on the code, the bank will then give them an authorization to access the data, only specific data. One can also say that based on the access token I have given, what amount of information I can share, the bank will share. That also the one can dictate. Okay, so there's a lot of role that can be maintained so that the TPPs don't get access to everything just because the customer is given an access to the consent to access the data. Okay, so that was it. I wanted to just quickly touch. Dr. Farooq, I have 5 minutes.
Can you make it 2 minutes, please?
Yeah, I will quickly. I just want to touch upon this banking as a service, okay? Because now this is where we talk about the power of open banking, APIs, and everything coming together, and something we call the marketplace, because there are so many fintechs, and we got so many, and we also got the banks. The banks are the owners, okay? So they are the regulated institution. They are the one who have to send the reports of all their liquid cash, everything, liquidity, and their investment, everything to the central bank. They have the license to, you know, transfer money and everything. So they are authorized by the central banks to do transactions. Okay. Then we have something called brands. Okay. You have the Apples, the Amazon. Okay. They are, you know, they are selling different products, but they have a customer base. They are the Facebooks of the world. Okay. So they are the front who have all of these users who are logging onto their system, who are doing some interaction with them. And then we have a whole lot of service providers in between, okay, that are connecting the brands or the end user who are accessing the brands to the license over to the banks. Okay, so these service providers are all everything in blue. Okay, and we say that, okay, if I want to make a payment, I would have to go to a payment provider call, like you know, there might be a provider like Thought Machine or Finacle, Infosys Finacle, or others. Or there would be, before if I wanted to do consent management and you know, identity verification, I'll have to have a IDAM solution, identity and access management solution. So all of these are there who helped bridge the gap between the brand and the license owner, because then the big brand don't have to be a service provider, don't have to go and get a banking license. So OBAN gives a good segregation of individual responsibilities. In the earlier days, licensor or the banks were doing everything, and they were the service provider, they were this. Now we have got a lot of fintech who are the service providers. Okay, and we have got the big brands who want to provide those, consume those services. So, and this is another slide which just talks about various players in the market. This is another way of saying we have the customer, the banking solution stack, and then there is a bank. Okay, and this is what they are doing. Okay, what does the bank need to do? Okay, there are a few things the bank's role is. They need to have, at least, whether it's a fintech or an existing bank, you need to comply. Then you need to compete. But when you're competing, we also need to make sure that you can monetize and you can get benefit from what changes you're bringing in. And then you need to have a digital presence that will allow you to compete with the other players in the market. Okay, so making the mobile channels or the digital channels attractive for your customer base to access your products, and also the banking service. This is just a very simple line diagram that I have created. There's a customer, they'll come to a digital channel. There are these third-party providers. They'll come to this API management, which is like the API hub with the API gateway. They'll verify the customer or the third-party provider. They will, depending on their mobile devices, there will be some analytics that will happen. Okay, and it will also protect from too many false access happening. And then we have this core banking system that might be for lending, for treasury, or whatever. There will be this transaction or payment management. There will be the payment gateway. But this data, the customer data and a general ledger data, can be used for, we'll have customer data, will also have the contract and the party management or the customer management solution. It will aggregate the data and provide you some visualization, your dashboards, what is happening with some data analytics. And for operations, it will have case management to see when things are going wrong. So this is, And then this is just a slide which talks about what is banking as a service platform layers.
Perfect.
That's it. So I've gone fast. I'm sorry about that, but I will open for questions at the when we're on the panel. Thank you.
Yeah, I think that we have a lot to discuss in the open discussion, inshallah. But before that, okay, my sincere apologies that I forgot to mention about our guest of honor. And this is basically Mr. Shahzad Ahmad Malik. He's the Vice President of ICMA Pakistan and Chief Executive of Shahzad Malik Management Consultants Private Limited. Let me just give you a brief about the ICMA Pakistan. That this is basically the Institute of Cost and Management Accountants of Pakistan. It was established in 1951 with the objective to regulate and promote the profession of management accounting in Pakistan. Presently, the institute has around 7,000 members. These members are serving on senior management positions such as CEOs, CFOs, COOs, CIAs, company secretaries, financial analysts, public practitioners, management consultants, etc. Hence, making significant contribution towards business growth and economic development. The institute currently has over 15,000 students, more than 200 faculty members, over 260 employees, 7 regional and 6 overseas branch councils, and 11 education campuses and 20 examination centers. In addition to this, the institute is also actively involved in providing technical support to the Ministry of Finance, Ministry of Commerce, Planning Commission, Securities and Exchange Commission of Pakistan, State Bank of Pakistan, Federal Board of Revenue, Accountant General of Pakistan Revenues, Auditor General of Pakistan, Competition Commission of Pakistan, other ministries, regulators, and policy-making organization. I would like to heartfelt convey my thanks for the support of ICMA Pakistan. And I again apologize for missing out this important information and the introduction. Really, really sorry for that. But welcome to the panel. Really appreciate, and we are completely honored to have you.
Thank you, Dr. Thank you very much. No issue.
Thank you so much. So with that, we would like to move on to our second speaker. So let me just introduce our second speaker, who is Mr. Syed Suhail Javed, Director Payment System Department. He's the Director of Payment System Department of State Bank of Pakistan, SBP, which is the Central Bank of Pakistan. And he's responsible for creating development strategies and regulatory policies around technology, innovation in digital financial services to better manage risks, enhance efficiency, and strengthen competitiveness in the financial and private services sector. During his more than 20 years at the central bank, Suhail has held various roles in technology and automation, policy regulations, and supervision, treasury and market development, and has led the development of new regulatory regimes for non-bank fintechs through regulations for payment system operators, service providers, and electronic money institutions. He is also leading the work on innovation in digital financial services and fintechs facilitation at the State Bank of Pakistan. Suhail has led the key technology projects at SBP, including the implementation of its core banking system and the real-time gross settlement system. He is also the project director of Pakistan's instant payment system, BaaS, which is currently being rolled out. And he holds a master's degree from applied sciences from University of Waterloo, Canada, and another master's degree in statistics from University of Karachi, and an MBA from the Institute of Business Administration, IBA, Karachi. So it's a pleasure to have you, Mr. Suhail, with so much vast experience. We are very sure and confident and looking forward to your presentation. And thank you again for your contribution. So over to you, Mr. Suhail.
Assalamu alaikum. Good evening. Thank you, Dr. Farooq Saab. And thank you for Alif Technologies and BaaS for arranging this, and ICMA for being a core partner for this session today. We really appreciate your engagement. Today we have a very important topic on open banking, and I will be sharing the thought process of State Bank of Pakistan around open banking. And I'm thankful to Les for laying the groundwork for me. He has given a very detailed and a very good presentation on different concepts relating to open banking. So I'll not be repeating those, and I'll just be focusing on what State Bank thinks about the open banking initiative. But before that, I would like to give a brief introduction as to what we have been doing during the past 8 or 9 years. And previously, State Bank of Pakistan was, and I'm talking about 10 years ago, maybe, or 12 years ago, State Bank of Pakistan was mostly looking at ATMs as payment systems. And the best we had in the industry were cards, credit cards mostly operated by international payment schemes. In 2007, our Payment Systems and Electronic Fund Transfers Act was enacted. In 2008, we rolled out our real-time gross settlement system, which is a large value payment system for mostly for banks and big corporates. And after that, we were going through smaller changes like the introduction of IBAN in Pakistan. In 2014, we introduced the rules for payment system operators and service providers. And in a way, I think that was a response to PSD 1, which was mentioned by Les in his presentation. In State Bank, we were thinking of now enabling fintechs and non-banking entities into the payments domain. And the core question was, why should banks just be handling payments? Why can't it be other entities? So we issued the regulations, and initially the uptake was low, but today we have about 4 or 5 new PSOs who are operating in Pakistan under that regime. And those PSOs are also onboarding new fintechs for providing payment services in the country. As a result of our engagements with the private sector during the licensing process of PSOs, we realized that we also have to do something about e-money issuance. So we started working on the issuance of regulations for electronic money institutions. And after detailed consultations and detailed work, we were able to issue those regulations in April 2019. The regulations turned out to be really exciting initiative of State Bank, because now we have about 8 or 9, I think there are 9 EMIs who are in various stages of approval. Some of them have in principle approval, some are in pilot, and some are ready to be launched commercially. And then we also realized that we also have to work on the faster payment systems, because that was something that many countries started implementing. And I think even in UK, the UK faster payments was implemented as a result of the response to changes that were being introduced after PSD 1 and then PSD 2. In fact, it was launched in 2008, so it was before PSD 2. But in Pakistan, we started working on the concept of implementing a faster payment systems. And now our first phase has been rolled out in 2021 this year in January, with the bulk payments now live. We are now getting ourselves ready to roll out the P2P payments in October this year. And then the most exciting part will happen next year with the request to pay, where third parties would be able to request payments from their customers and their banks. So this would be an implementation of the PISP service that was mentioned by Les. So with that, I'll start my presentation. Let me share the screen with you on open banking. And I hope my screen is visible to everyone.
Yeah, it is available. It is visible, but could you please make it fully screen?
Yes, I am trying to do that. And let me see how I can. Just give me a second. Yes, so I think.
I think that you need to.
I think it's now.
Share the other screen.
Yes, so I think the full screen is now visible to everyone. Apologies for that slight hiccup. So I'll not spend a lot of time on defining what is open banking, and but the thing is that for State Bank, it's the sharing and leveraging of customer permission data by banks with third parties. And of course, for this, this would enable third parties to build applications and services, and a customer usually grants permission to a third party to access their data either directly or indirectly through banks. And then it could be used for, there could be many use cases. For example, people who are doing your taxes, or accountants, or payment processors. Merchants can request payments from banks on behalf of their of the customers. I think the most prevalent use case right now is the payments industry. Merchants usually request payments they request their customers' banks to debit the account and pay them. And then there could be other services also, like, for example, sharing of data for lending decisions. That is another very important use case. One more important use case is sharing of KYC information for enabling customers across the spectrum of service providers. So, for example, a security provider can request for certain KYC information from the bank, so that that broker can open accounts for their customers. So this picture shows what would be the defining framework for the open banking. I think globally also, and even in Pakistan. So on one side, we have the banks, and on the other, we have customers. And in the middle, you can see we have third-party providers. And there could be a variety of third-party providers. So I have just listed some of the providers that could play a very important role. For example, for SME financing, for housing finance, for tech services, I already mentioned. Insurance is another very important use case. So for all these use cases, these third parties who may not be regulated entities may require access to data and information and to accounts from banks. Now, for that to happen, I classify the total requirements into 4 very high-level pillars, if I can put it that way. One is having API specifications. So because we think that the secure and the important mode of sharing of data should be APIs. That's how the data can be shared securely. We need to have operational guidelines for everyone, so that everyone who is part of the ecosystem knows exactly what they are supposed to do and how they are supposed to access it and how to use it. Security standards are very important, and I would like to club data privacy and protection provisions also in security standards. So you need to have, and many of those standards are actually ready and out there. We just need to implement and mandate those standards. And then I think a fourth one is the user experience is very important. User experience means how much do you care about the customer experience? How do you care about their needs? And that is because of the financial inclusion aspect of this very important area. So why do we think we need open banking in Pakistan? Now I'll be very careful while using this open banking thing, because mostly it is used as a buzzword or as a fashion word. But I think we need to be very careful when we think about implementing open banking, and we need to look at specific use cases that would do something good for the industry and for the country. So we think that because of open banking, it promotes financial inclusion. It provides more use cases for the customers. It provides reasons for customers to have transaction accounts and then use them. It also enables the entry of new service providers who can offer innovative financial and non-financial services. And this is not to imply that banks or anyone else cannot innovate. If banks in Pakistan have innovated a lot and other service providers are continuing to innovate. But this is about the entry of specific specialized service providers who may need access to payment services or access to certain data just to provide a larger set of services or products from their end to the customers. And customers can also use their data to get more financial services. For example, if somehow customers can have can get access to can provide access to their payments data, it would help low-income customers build their credit capacity. So for example, if a customer is paying their bills on time, we can use that information to identify the credibility of that particular customer. And then, of course, there are many issues with regards to Pakistan lending to SMEs, housing finance. This is a big. There are gaps there, and there are areas where we are looking for ways of identifying how we can boost access to credit for SMEs, especially in the informal sector. And there could be partnerships where this problem can be solved. Of course, one very important area and a very, I must say, sensitive one is to share customer KYC information. I call that CCDD, which is collaborative customer due diligence. So multi agencies and multi entities, different entities can collaborate to share the customer data, and that would reduce the cost of onboarding customers. And of course, all this gets to build the country's digital financial landscape. Now, what are the risks of open banking? Now, as a regulator, I think it's my job to talk about the risks. So in the absence of a regulatory framework, we may face issues relating to data protection and what would happen in case of unauthorized breaches with the third party who is not regulated by a regulator. So how would the data be used? Of course, misuse of customer data by third parties is a big concern, and we have seen that happen in recent history as well. Fraud, scams, customer errors, how they can be handled, how can liability be determined in such cases, and how can customer be compensated in case of frauds or scams. So customer protection is another very important area for us, where we have to think about what would be the mechanisms for complaint redressals and liability management. Of course, market conduct is another very important area for us as regulators. So we need to have standards and obligations clearly defined. Especially if third-party providers are not adequately regulated, how do we address some of the gray areas there? What if the third-party provider is located outside the country and outside the ambit of the regulatory framework of our country? How are we going to handle that? Now, with the emergence of big tech, and Les showed in one of the slides also that many big techs are interested in offering services in the country. Now, if they are not located in the country, how will they be? They will comply with some of the regulatory requirements that we may have in order to protect our customers. And then, of course, with all this, business models will change. So banks may be slow to respond, whether intentionally or unintentionally, because of concerns about their business models. So that could be a genuine concern as well. So what are the policy considerations as far as open banking is concerned? So I've listed down some of the ideas, and just to update you, we have been working on this open banking initiative for about, I think, 7-8 months now. We have been discussing this with industry and with some of the international providers, and we have looked at some of the other countries who have done some work in this area and are in the process of rolling out their open banking initiatives. So I'll just try to summarize some of these policy considerations that we have while we're working on open banking. So first is scope. So what is that? What are the types of services that could be shared or offered? What type of data could be shared or offered? And who will be the participants? So that is the first consideration for us. The second one is whether the participation is going to be mandatory or voluntary. So usually regulated entities like banks are required to participate in a mandatory way in this initiative. Or if anybody wants to do voluntary participation, what is the take of regulators on that? Standardization of data sharing. I think that is one area where we are very much clear that we will be using APIs for data sharing. So a bigger challenge then becomes how to standardize those APIs. In Pakistan right now, this sharing of data and services is enabled by some of the banks. They have their own APIs. So how can we bring the industry into a common, standard, whether should State Bank do it, or we let the industry do it, or we have a third party or a third organization draft those standards. So that's another question. How do we implement the open banking initiative? Should we roll it out in a single stage, or we do it in multi-stages? And I think from in that area also, we are a bit clear that we will roll out our OBI open banking initiative slowly and gradually, so that we all get accustomed to the requirements of the new system, as well as familiarize ourselves with the risks that may be there. And then governance is another very important area. Who will set standards, pricing, and who will determine provisions for dispute and liability settlement? So this has to be done. And I think to start with, if State Bank is embarking on this initiative, the State Bank will start. But for this, the State Bank has to work very closely with other regulators. So for example, PTA for telcos and SECP for other companies, and even Competition Commission, because competition and consumer protection is also a very important part of this. How will the cost and pricing be distributed? That's another very important area that we have to think about, whether we should be interfering in the pricing, or we let the industry determine it. And then there are concerns about data privacy, data portability, and customer consent. Now, customer consent is a very important part of this overall work. How do we enable customer consent? What architecture we use for doing it? And then, of course, like I said, we need to have rules for liability and consumer protection, especially for recourse in case of frauds and scams, and how we are going to handle that. So globally, if you look at this is from a paper from BIS. I think it's a couple of years back, old paper, but mostly the situation is similar, where you can see different types of approaches that are adopted by the regulator. So on one hand, you can see there are prescriptive approaches where regulator mandates the rollout of the open banking initiative, and then makes it mandatory for the participants to become part of it. In some of the other areas, it's mostly facilitative, where regulators bring everyone around the table and facilitate the resolution of issues, and facilitate the process of reaching a consensus on those issues. It could be market driven, and mostly you can see it is market driven, in the sense that let regulators just wait and see what is going to happen, and how are the participants coping up, and what are the solutions they are trying to bring. And of course, a large part of the map, you can see people are adopting or actively considering. And I think, like just a disclaimer, this is not the most recent slide, so things may have changed. Especially, we've seen what's happening in Brazil and in Mexico and some of the other countries where they have actually rolled out their initiative. So for Pakistan, we are now working on an open banking framework, and we will very soon be issuing this framework for open consultations. And I think from a policy objective purposes, we are very clear that we need to promote competition and consumer choice in the financial sector to improve service delivery and efficiency. We need to promote innovative products and services to benefit end users. And of course, all this with the overarching goal of enhancing financial inclusion and digitization in the country. And State Bank can take the lead as far as governance is concerned, and State Bank may need to collaborate with other regulators and other participants to develop standards relating to API, security, consumer protection, and data privacy. We have classified the data into three types that may need to be shared. So one is the generic services data, for example, location data, like location of ATMs or agents, branches, or products, information about products, product pricing. All of this data is usually public. It's available on website. It's just that banks may use APIs to provide this information, and third parties can then access it and embed these services, this data into their apps. And this is, since sort of a harmless type of information, no customer consent required. Rolling out only the generic services data in the beginning will give a flavor to the industry as to what this data sharing through APIs would look like. And of course, that has to be very closely followed by the sharing of customer data. So personally identifiable data of customers that may be required for account opening and administrative purposes. So that is the third. And then finally, the transaction data, which is very important for users, like determining the credibility and access to payment services and account services. And so very quickly, I'm aware of the time. So very quickly, we need to work on the standardization of APIs, and we will work with the industry to determine the standards to which data and services would be shared. I mentioned that we are also implementing our faster payment systems in Pakistan, which is called RAST, and RAST has its own ISO 20022 APIs, and we are planning to use those APIs for at least for payment services, because RAST not only uses APIs for conducting the transaction but also doing for certain validations and pre-validations, and we want to leverage on that infrastructure to enable the use of APIs for payment services and maybe other account services as well. Of course, for governance, SBP has to consult with the industry and other regulators and issue regulations according to the type of sector or service. So for example, if we work on enabling SME providers, we need to work according to SME regulations, for example, or for payment providers, we need to keep in mind the payment regulations and issue regulations according to that. And simultaneously, we also need to formulate rules for liability and consumer protection, like I mentioned earlier. And of course, pricing and costing it's a very sensitive area. And I think Les also mentioned that if banks are sharing their data, they need to be compensated for that. It's their customers, it's their information that they collected, and it's not their information, it's the customer's information, but banks collected that information, so they might need to be compensated for that. So pricing and costing has to be, and costing in terms of if we put in infrastructures in place, like Les showed in his presentation, if we put in place a data sharing mechanism or a platform, then who will bear the cost and how that would be distributed. So that's, and then like I mentioned, framework. I earlier showed the slide. Of course, there are two types of data for us: data that does not require customer consent and data that requires customer consent. And of course, data contributors could be all banks and EMIs and PSOs and credit bureaus. And of course, the customer segments could be individuals and micro and small SMEs for both types of data. So of course, I'll at the end of the presentation, I would like to mention it's not an easy task. We need to move on this initiative very with care and caution, because of course in this area, I think I can make this statement safely, including myself. There is a lack of knowledge and capacity in the open banking domain, especially when it comes to upgrading your technology architecture systems. There are lack of trained resources. And the industry also is trying to cope up with the requirements, but there is a huge requirement of technical resources in Pakistan for this. And for that, I think ICMA can play a very important role in building that capacity and making sure that industry gets access to resources. Of course, we need to look at the legal and regulatory frameworks and make sure that they are not inadequate and that they cater to all types of dispute scenarios. And of course, we have a tendency to work on quick wins without deep and long-term thinking and planning. And I think this is one initiative where we need to be very careful and work very carefully on this. But with that, I think there are many key strengths for Pakistan. So our banking sector is very vibrant. It's fairly developed. We've got good success stories. We have got regulators who have shown the capability of working together and finding solutions. We have a rapidly developing fintech ecosystem, and I find great heart in seeing the emergence and development of our new startups who are rapidly, foraying into this domain. We have enabling policy frameworks. I shared with you some of the frameworks in payment systems. We also have frameworks in banking and in other areas. SCCP, for example, is coming out with very good initiatives. And all that could contribute to financial inclusion and promotion of and adoption of digital payments. We have got new EMIs, we've got PSOs and PSPs who are now ready and they are offering their services in Pakistan. And you can see that the numbers are getting better every year. If you compare the data, you can see that digitization is going up. We are also working on digital banking framework, remote onboarding of customers. Caution digital account was a use case, and I think it's a success story for us. And of course, we've got RAS, which is built on ISO 20022 framework. And I think all this are good reasons for us to actually start and continue working on the open banking initiative. Thank you. With that, thank you so much.
Thank you so much, Mr. Suhail, for a wonderful presentation and deep insights from Pakistan, and also shedding light from the regulatory perspective. What has been done in Pakistan is quite commendable. Without further ado, I would like to move on to our last speaker.
Farooq, can we have one small poll, or if you don't mind?
Yeah, sure, please.
Yeah, sure. Yeah, please, participant can participate in the poll.
Okay, we have a poll actually, so participants can actually have this poll. I will keep it open until the end of the next presentation, so you will have more time to think about it and then answer it diligently. So Campbell is actually, let me just introduce our last speaker, and sorry for the delay. We have already running out of lagging behind some time. So Campbell's career has spanned a range of global commercial and technical roles, primarily in the tech industry. He has led large, complex deals, including M&A transactions, whilst holding senior level roles in Vodafone, Intuit, and Bazaar Voice, amongst others. He worked on many innovative new concept launches, including mobile payments, the Kindle, LBS, and blockchain. Since 2015, he has pursued several opportunities as a founder and co-founder in a range of tech sector business models. He has also invested in and advised a number of disruptive startups and was a dragon on the UK Vira VC launch. He led the 4 VC Series A round in Takestock.com in 2015 and pioneered the circular business model change required for the food industry. He followed this up with the launch of Sookbox.io, the world's first dedicated platform as a service for B2B companies seeking to launch an online e-commerce and marketplace presence. He has an BSc from the University of Glasgow, an MSc from Strathclyde, and MBA from Henley, and postgrad in blockchain strategy and artificial intelligence from Oxford University. He has also recently completed a program at Cheong Kong Graduate School of Business in Beijing. So welcome, Campbell, and it's an honor to have you. The floor is yours.
Pleasure. Can you hear me okay?
Yep, perfect.
Yes, mate.
Okay, thank you. Salam alaikum. Hi, Asid. How are you doing?
How about you? Fine.
Fellow Oxford alumni. Let me jump straight in then. So am I presenting direct, Dr. Farooq, or do you want to present the slides? Do I want to present from here?
No, you can do your present from your side.
You can do it and you can control
Let me do that then. So let me share my screen. So put some present mode, and do I have screen sharing? Right. I think I do. Tell me if you can see my screen now. Has it appeared? Can you see my screen?
Yes, it's perfect.
Great. Okay, well, thank you, everyone. My background, as you just heard some of that, is mainly in technology rather than in banking. In fact, I'm not a banker. And I spent 2.5 years running Intuit's European, in fact, EMEA business. And my area of interest at the time was heavily linked to the open banking conversation, because we were trying to open up access to financial information for small businesses to create what you now know as the kind of fintech SP value added layer. So my interest was very much in that space. I spent a lot of time talking to banks around Europe, including Barclays, Royal Bank of Scotland, BNP Paribas, Deutsche Bank, and others. And so I was kind of in the eye of the storm for a couple of years, trying to persuade them to give us access. And as a large US tech company with deep pockets, we still found it incredibly difficult to get into that community and make any headway. So for one, I was delighted when the open banking initiative really kicked off out of the UK. because I felt it was a great opportunity for the UK to show leadership in open banking. And I certainly felt it at the time. The banks would never really have done this on their own unless they hadn't been regulated into doing this. So just talking through the subject, I don't want to repeat what everyone else has said, so I'll try to accelerate through some of this. What I was asked to focus on were these kind of key 3 areas around what are the major issues and challenges from my perspective, what I think may be solutions, and where I think this is all going to go in the future. And I see all this through the lens of I'm a tech guy in a tech company, so I come at this from a disruptive perspective, keen to seek out and explore opportunities in this sector, and therefore my whole perspective on this is here's where I think it would go if the banks would allow us to do this. And so the context of this whole conversation is based on a tech viewpoint. So again, some of these have already been covered. So the UK, as I'm sure you're familiar, the financial regulatory industry is controlled through the CMA, and they effectively mandated the open banking initiative through the OBIE back in 2016. That's what really became a catalyst for change and made things actually really happen. The UK has been doing this for quite some time. I was heavily involved in this from about 2010 to 2013. So 10 years ago, when this was coming to head, is when I was doing this predominantly. And it's no surprise, partly because of the size of the London market and the dominance of London as a financial market, that over half of the major fintech unicorns that appeared in the last 10 years are London-based and come out of London. Some of the names are here for you to see. I'm sure you'll be very familiar with a lot of these. The goal, obviously, behind all of this was to enable the market to open up and to allow third parties to come in and advance services and provide access to information, access to money, and access to everything that comes around the financial world at user level without necessarily having to be a bank yourself. And so prior to this happening, prior to PSD2 coming in, open banking appearing, there were many different ways and attempts to try and get this information. So if you imagine, from my point of view at the time, running QuickBooks, our customers, we had millions of small business customers seeking to access their financial information and to directly integrate that into their accounting information so they had a seamless fiscal view of their business. And we adopted a range of technologies, including screen scraping, to do this. But at every turn, it was made difficult, and we certainly felt that without this, we would never have made any headway. What's interesting is that most of the growth in this area, if you look at these names on the right-hand side, most of this growth has been kickstarted by 2 major areas. One is credit checking services. We'll come back to that later on. Another one is a challenger bank. So you've heard of a number of these, like Revolut's obviously probably the most famous. That's a Starling Bank. These are organizations that have absolutely changed the landscape at the small business and consumer banking space, not large corporate. And it's only really become possible because of the outcome of some of the stuff that's happened to the open banking initiative. So where are we now then? So the open banking in the UK has reached a bit of a plateau. We've seen over the last year a real slowdown of the uptake of end user services. But if you look at the open banking website, they talk about this through the lens of the number of third-party API connected applications and the number of account providers that integrate into that world and the number of services that run over the top as layers. My take on this is that that's not necessarily the right way to look at this in terms of its success, because as you'll see later on, although the 2 big land grabs were in credit checking and in challenger banks, there are a plethora of services that are now coming through, which are starting to show traction at the user level. And so when I talk about these 4 points on the right side, the one I would draw your attention into is the last one here, which is the open banking entity, the OBIE itself, does not actually sit in the transaction flow anywhere. You may have seen this earlier on in some of the flow presentations. The job is to create framework and structure and legislation to enable this and to act as the kind of conduit for change within this world. So they've got a really interesting role to play, because the large banks, in my opinion, are quite resistant to some of the initiatives that are coming out of this. But at the same time, they're being forced into doing it through this initiative. So they've then moved that into the challenges that I think exist in open banking. Well, I've listed just some that I'm aware of and I've come into contact with. These are not exhaustive lists. So I start off with this low uptake issue. So there's 63 million adults in the UK and 70 million bankable adults and young adults in the UK. And only 3 million users, 3 million consumers have taken up services which are dependent on open banking as of the end of June this year. And that's obviously a lower number than people expected. When this open banking initiative really kicked off, at the time, there were numbers of between 25 and 35% of the UK's population were taking services. So that's clearly a lot less than people had hoped for from the regulatory point of view. But interestingly enough, what we have seen in parallel now is other things coming in that have addressed some of the pain points and frustrations at the consumer level. The biggest one, of course, being the ease of which you can switch your accounts. There are now parallel services running where you can switch your account seamlessly with a single signature on one piece of paper, and all of your standing orders, direct debits, and recurring financial transactions get moved across to your new bank account. So that has, as a route to solve customer pain points, has taken a lot of the steam out of the market, which means that some of the challenger services that were coming through, third parties enabling a better front-end user experience, have been somewhat negated by this growth of switching. Sorry, just move this out of the way. Second point I'd say is that the number of FI relationships, the financial institution relationships, plays a big part in this. Again, when I was at Intuit, we had a brand in the States called Mint, and the Mint.com model, huge growth in America, and it was driven largely by a consolidated, aggregated access to your money, and more importantly, the value added there in terms of information, AI-driven recommendation for better financial management sitting on top. And I always felt that in the UK in particular, we had a much lower number of relationships as consumers to banks that the American colleagues had. So we had, at the time, 3.2 banking relationships on average versus 8.5 stateside. And what that tells you, of course, is that the aggregation value is linked to the number of different financial dependencies and relationships that you have. The more you have, the better the value of the aggregation layer. Get a single view of your money management. We'll talk about that later on. Then the third point I'd raise around the issues here are regulatory costs. So the OBIE itself has swallowed close to £100 million since it was set up 5 years ago in its own cost of operation. So clearly that burden in the system has to be changed. And this is the model was always try and make it become financially self-fulfilling to charge you access to membership and compliance. And it's starting to do that now. So last year, the first year, it charged out for its services, and it raised 3.4 million in revenue for its service charges into the industry, which is still a long way from its own OPEX of 36 million. So this is a major problem, is the barrier this produces to small fintech startups in particular, find this quite a big problem because the cost of compliance is going up and up and up. The fourth point I'd raise in here is that the big banks have got a vested interest in keeping disruptive challenges out, obviously. And there's been some critics have been commenting on the fact that what's actually been happening is that the fintech startups have come along and created an innovative service layer, like all kind of startup environments. 10% of them will be successful, roughly. So the ones that are successful in getting consumer traction are acting like a sort of research and development function for the big banks who then try and copy that functionality. And we've seen quite a bit of that with a number of UK banks. My next slide, since we're stuck, let's see. There we go. My next slide talks about more of these challenges. So the point 5 is this relationship between the need for security, and some of the previous speakers talked about the importance of giving control to the users, but also to make sure the security layer is robust. is a battle that's continued to be fought out. For example, one of the early rules that came in was a 90-day re-authentication policy. So this has created quite a lot of friction for a lot of the application providers out there, because the end consumer is forced through a fairly encumbered process every 90 days to keep the service live and running. And there's no ability to override that. So they can't say, as a consumer, I'm comfortable, I trust my QuickBooks or my Xero or Mint or whoever I'm using for this service transport-wise. I trust them. I want to give them permission to keep doing this into infinity. Well, that was disabled, and it causes this customer pain point where they have to go back in. It's only one example of what I'm talking about, but there's a continuous set of conversations going on within the open banking world around how to get this right. How do you make the convenience not be encumbered by needs to have security and authentication protocols? My last case is that I talked already about this idea that from an application side of things, it's definitely been driven by the early adopters in credit checking and accessing low value distressed loans. So again, a lot of if you go back to where open banking started, a lot of the promise was around greater access to your information, greater access to financial advice through third-party AI-driven aggregators, and of course, the ability to control your bank account from third-party destinations. And actually, when you look at this, there's an improvement in the last 12 months. Look at the first line, improved financial decision-making. That's been one of the areas that has sort of delivered, but a lot of the others haven't. If you look at access to advice and guidance, there's been almost no one, only two ecosystem applications that have emerged there to really take that forward. And that was one of the hopes from the industry, that we get that kind of layer, we'd see a big improvement. And if you look on the right-hand side, you can see the breakdown of the apps that are available. This is the apps as a percentage of total apps, not the adoption levels. But you can see here that this tells a tale in terms of where fintech companies are coming in to try and disrupt. Product comparisons, number 3, I personally thought that would become the biggest one. But you can see as you go down the list here that there's some quite interesting areas like charitable giving, for example, at 5%. It's a really interesting area for disruption in open banking, when people can start to link their financial expenditure and behavior to charitable outlets and other things that they might want to do with the money. So it's quite an interesting space. So then if you move on to suggested solutions, now this again, as I give you this with a health warning, this is my personal perspective on some of the things that can be done to improve it. So we start off on uptake then. So one of the areas that I think is an important area to address is the protection around innovation. So if startups come in, really innovate, come up with something really special, and it gets market traction, then they should be allowed, in the same way that, for example, a pharmaceutical company will be allowed to enjoy a patent period on their product. I think something similar should be brought in here. Clearly, there are other frameworks in law to protect anything you've built in terms of intellectual property, but I think the broader OB program could do more to protect innovation and to incentivize innovation in this space. In terms of FI relationships, I think, again, this is something that's not necessarily a direct area that can be addressed, but what I think will be happening here over the next few years is that the UK government in particular is keen to empower consumers to manage more of their own finances, become more independent. And we've seen this in a number of different areas, from allowing pension funds to be taken out and managed directly. So you can put your property portfolio into your pension fund now. There's a whole range of activities coming in the UK, which I think will create a market where more ownership of the financial management is taken at the individual level. And if that happens, that will add kudos to the layer that adds value there. And I've given you some screenshots here from mint.com in the States. And you can see that they're kind of some of the big key points that Mint focuses on is on the right-hand side, they call it Mint Sites, is like kind of AI-driven behavior analysis. So it's looking at people like you with similar kind of income, similar kind of expenditure, and saying you're spending more than your average person at your level on that particular thing. It could be your mobile phone bill or your car insurance, which in turn leads into a business model opportunity to cross-sell and upsell access to other services, which is what Mint already does in the States. This is only a very fledgling area in the UK. And on the left-hand side, this is the aggregation component. What we've seen in the UK, again, isn't much demand at the consumer level for all your bank accounts to be managed through a single application, because most people don't have multiple bank accounts. They tend to have one main current account. They may have a separate relationship with a credit card provider, and then they may have another relationship with some sort of investments like shares or investment funds. But they don't tend to have multiple bank accounts for different things. And so the need to aggregate, I think, is quite low in the UK for consumers, but it's definitely there for small businesses. And so the ability to control all your money from one application, I think, is an area of growth that we're going to see more and more of. Yeah, the last thing I'd comment in this as well is that, again, coming from an Intuit perspective, the biggest product we had in the US was TurboTax. And if you've lived in the US, you'll probably know it, because almost everyone in America submits their tax returns at state level and federal level through one of the major applications, of which TurboTax is the biggest by a long way. And I think this is an interesting area, because the as you stitch all this together, the ability to handle one of the outputs of your financial life, i.e. taxation, could be integrated better and done better by fintech companies than by the UK government's HMRC's website, which is notoriously quite poor at managing tax submission. And I think it's an area I'd like to see a bit more on. And it would definitely open up, if this can be done. At the moment, this is outside of the open banking arena, but if the UK government allow third-party fintechs to develop tax submission like this, I think it would massively open up open banking further. Then we talked about cost earlier. This chart on the right shows the actual and projected cost of running the open banking initiative in the UK. So it's come down. It's had a lot of criticism and a lot of pressure. If you look at the years 17, 18, and 19, it was just rising fairly steeply. And then it came under a massive amount of pressure from the industry. There was a bit of an overhaul, cost reduction delivered in 2020. And there's now a recognized need that needs to become a self-financing operation. But the general compliance cost needs to come down. And so my view is, if it doesn't come down, as the burden transfers over to the charging model, this is going to stifle innovation, and we're going to see a lot of small fintech startup businesses unable to pay for the cost of compliance in the system. So moving on to number 4 then, I talked about protecting innovation already. I think this is, the more I think about this, the more I think that this should be maybe capped to the size of the organization. Just a thought I had when I was writing this out, that, clearly if a large bank creates something that's different from when a small fintech startup should, so the protection should definitely be different by the size of the operation and the organization that's doing it. And then number 5, then, usability and security trade-offs. Again, this is a never-ending cycle, in my opinion. There's an inevitable consequence. What consumers want is both lightning-fast, highly intuitive UX UI layer in accessing their services, but they also expect it to have the security that's typically made available for internet banking. And so this is an area that's going to continue to be in contention, naturally, in a healthy way with each other. But I think there's definitely, in my opinion, an opportunity to improve the process, at least to make it faster. Because if you talk about the 90-day reauthentication process, that's now been finally addressed, but it took 18 months of discussion to get it to the table where it can be taken seriously. And so I think that can be made faster. Perhaps the OBIE could take a separate spin-off group to look at usability versus UX and security, and to deal with it faster. And my last point in here then is in use case spread. So clearly, I think the value will come from, and we'll talk about this in a second, the future use of open banking, but from driving innovation, fostering innovation that can enrich people's financial lives. And I think there's quite a lot that can be done within open banking, which we've talked about some already, to try and improve this use case spread and not just let this become the bastion of credit checking and access to distressed loans. So what might the future of open banking look like then? Well, it's again, just my opinion, there's a lot of things that could happen in space. I've focused on a few things here. My first one was around further deregulation. I would like to see, for example, and I think you might see this, is if you imagine you've got your information layer running across your financial services now. So you may take on a third-party service which does a better job of telling you how your finances are running. It'll give you recommendations, and it'll give you access to things. I think that can be broadened. I think the framework that's being used in open banking can be used for things that are outside of banking. Now, whether it's done within the same organization or not is another story, but things like utilities, telecoms, gas, electricity, water, these things can be brought into this model as well, and make it very easy for the platform to do the measurement of the information layer and the switching services that come with it. My second point then is around pre-qualification. One of my big bugbears with the financial industry in the UK in particular is that we've always had this kind of risk relationship with consumers, where if a consumer applies for a loan and doesn't get it, it goes on their credit score that they've applied for that loan, and it then affects their credit score, and you end up potentially in a vicious cycle. I think we could use the open banking agenda to reverse that, so that people are told, here is your pre-qualified access to money. Here is what your risk assessment you're asking for it. We're pre-authorized for this amount of lending access. And I think this has been a difficult thing to tackle until now, but I think the open banking capabilities, I think, will allow disruptive organizations to come in and potentially do a better job of this. I think the whole relationship with money at the consumer level can be changed as a result, and we can see that already there's some of the organizations coming into this space, like the Revoluts, like the Sterling Banks, who are doing a better job, I think, of taking the customer through what their financial capabilities are through advice layer, rather than just waiting for them to apply for money to get accepted or failure. So my third point was around transparency and ethics. Again, I think that when I bring this life in my mind, if you imagine you've got an investment fund, you're putting money into your or even a savings account in a traditional bank, you have, it's an opaque layer. You have no visibility really where your money's being used. Obviously that bank will take that money, go and work that money somewhere in the global markets. And apart from the general brand, on the bank's website talking about what they invest in and what they don't invest in and what they support, there isn't really any specific tracking. So I think there's a layer, because of the kind of disruptive players that are coming in here through the information layer. There's an opportunity to bring more transparency into ethical and environmental investments. And sometimes this is, I've seen this happening in the hedge fund industry. I've seen it happening in a lot of the investment markets, but it's not necessarily passed down to the consumer layer. So where, in terms of environmental impact, which companies borrowed money from this bank that are in the mining sector, for example, you may choose to use banks and products from banks based on whether or not the money's being used in areas you think are ethical and environmentally acceptable. But it's generally lifting the opacity over where your money is being managed. And then I think we talked about some of this already, the beyond banking concept. Where does it go? I think that what we're going to see broadly at open banking is enabling this by bringing in the kind of non-banking upstarts into this equation. There's a real fusion between services that are traditional banking services and other services that are used to affect your financial life. A good example is insurance. We talked about tax submission already. I think there's a number of different areas that could come in here that I think this framework could enable, and act as a single point of contact for the industry that's trying to drive innovation in that space. So that's pretty much me. As I said at the beginning, my perspective on this is not a banker's perspective, so apologies if I got some of the terminology wrong. So I'm coming at this from a purely tech disruptive point of view, and I'd be more than happy to take any questions as we move into the next phase of this webinar. Thank you.
Thank you so much, Campbell, for the wonderful presentation. And with this, we have completed our first section of presentation, but we have a very limited time for the Q&A and panel discussion. We have some questions already queued up. but I think that in this limited time, we might not be able to cover all of them. But I will randomly choose some of the questions, and then I will ask to the respected presenter or speaker. So let me just have one round of questions, and then we can see that, like, if time allows, then we can have another round of questions also. So starting with Mr. Suhail Javed, can we work on, there is a question about that, can we work on super tech oriented ecosystem for open banking regulations, which constantly has oversight on API specification, operational standardization, and customer due diligence, KYC compliance, and other regulatory requirements. So I mean, is it basically in the pipeline? Are you thinking on these lines, or it is something like you do not want to focus on at the moment? Later, perhaps like you would like to consider it.
Thank you, Dr. Farooq. I read the question. I think it's not super tech, it's sub tech, which is short for supervisory tech. And
okay.
of course, with the emergence of fintechs and the emergence of new technologies, subtech is something that regulators can effectively use for ensuring compliance, which is the case with RegTech as well. And we are encouraging our regulated entities to use more and more RegTech. And we are also, in fact, working on, in the payments domain, we are working on identifying new solutions that we can use for real-time monitoring and oversight of service providers. And I think one of the big challenges with the open banking initiative is how you oversee not just the conduct of your regulated entities, but those who are non-regulated. And just to give you an example, we closely monitor social media, we monitor Twitter, Facebook, and for any signs of anything that has happened, especially during long weekends or something that is not formally reported to State Bank, but we try to identify what has gone wrong. And what we see is that the use of subtech for State Bank, maybe use of AI-based systems or other machine learning algorithms would definitely enhance our capability to proactively identify any wrongdoing that has happened, anything that has happened with the customers, and enable us to intervene immediately and take action. So subtech obviously has a very important role to play, and we are looking into it. Thank you.
Perfect. Thank you for the response. I have question for Leslie. Most of the questions are basically surrounding the topic of security concerns, actually, in an open banking environment. So let me just sum up with them and then have a summary. Like, how do you see theft of high-profile accounts, and how effective, efficient, and fraud protective the open banking ecosystem is? Because there are some concerns about that. Third-party fintech companies can give data of high-profile accounts to different banks for marketing purposes, or perhaps like they will be mishandling by users, and then they are caught with fraud, as we experience in handling ATM, credit card, debit cards, etc. So how do you see it?
So I think one of the few tenets of open banking, or the aspect of features we say, is fundamentally consent and strong customer authentication. And if you see in the UK or any country implementing PSD2, they are enforcing that. Okay, so from that perspective, I would say it is quite secure. Okay, now there are various models of how strong customer authentication can be enforced. Okay, and it is, at the end of the day, it is an association between the customer and the bank where the customer is banking. Okay, so from that perspective, ensuring that there is a strong customer authentication, the consent is happening, that is of any loss of financial data or anything from that perspective. So I think open banking enforces that. If there is, as I said, there are so many different models of how SCA can be implemented. One is the out of bounds, okay, whereby the engagement of the customer with the third party is not, and from third party to the bank. So that is the one-way one-way access. But when there is a strong customer authentication happening, that is not followed in the reverse way, so that a bank doesn't send to authenticate. It doesn't send the response back to the third party provider, but it sends it directly to the customer. Now, how that happens is also a challenge, in the sense, when you have something on your app, on your mobile app, you have the bank's application. You also have the third party's application, and you're giving permission to the third party to send data. Okay. And then the bank is supposed to get validate whether the request has come from you. That has to come through a different mode. Now, that mode could be email, or that mode could be that the bank embeds a certain API or SDK into its own app that is on the mobile. So there are many technical ways one can do that, but I think the enforcement of strong customer authentication does that. Okay. On the other point, whereby credit cards are getting stolen, or that data getting misused, I think how open banking can avoid that, I haven't thought about that yet. We'll have to look into that. But can you repeat that question again, because I did not catch it completely, Dr. Farooq?
Okay, so there were some concerns regarding the security of within the open banking system. For example, like there was one concern saying that how effective, efficient, and fraud protective it is, because it is subject to, basically the data actually is subject to it, prone to be mishandled by users and then caught with fraud, as we experience in handling ATM, credit cards, debit cards, etc. So that is one of the concerns.
We have to see that how Campbell have made such programs that these things are happening. Campbell,
yeah.
maybe there is a leaking in the program which you have made, huh?
Yeah, why not?
If I can just add to,
I have one. Yeah, sure.
If I can just add to that, I think that's why, from a regulatory perspective, I talked about having rules and regulations for for dispute, liability, for customer data protection, privacy, and I think that's the most important part, even more than the technology itself. And that is the job of the regulator, to figure out how to develop regulations to prevent and protect customers from such misuses.
Absolutely, I second that.
Yes. Okay.
The regulation has to, in this case, be proactively enforced, either by the banks or the third-party providers, to protect the customers.
Mm-hmm. Perfect. I have one question, and I think that unfortunately, like, we are running out of time. So like, this would be the last question, and then we will close our panel discussion and Q&A session. It is basically towards Campbell. So since you are coming, I can sense that, like, you are coming also from a investment background, where you are investing and then facilitating also funds for IT and tech-based projects and startups. And there is a phenomena, cryptocurrency. So how do you see that, like, this open banking and cryptocurrency, can they marry off? And then is there something which can basically emerge as a mutual benefit? And can something, I mean, I would like to know your thoughts on it, that in the future, do you think that there will be a convergence for betterment?
Yeah, it's a massive question, and thank you for asking that. I mean, obviously, you look at what's going on in the challenger banks. I mean, Revolut's a good example. Revolut now has a cryptocurrency trading desk integrated into their banking applications for consumers. They were wrapped over the knuckles. They were fined by the FCA for doing it. But because the bigger debate really, I think, sits behind cryptocurrencies in terms of regulation. So open banking itself potentially creates a bridging point between, kind of crypto exchange environments like, the Binances of the world and blockchain.com and these guys and access to the cash in your bank account, moving money between the fiat environment and the non-fiat environment. And that is not a technical problem, it's a regulatory one, really, from my point of view. I think that if you look around the world, there are some countries like Malta that have really taken cryptocurrency forward. But there are also many countries in the world that are very reticent to see cryptocurrencies move into mainstream finance management. But the consumer demand for it is there. So I think it's a disruptive opportunity for sure. But whether or not what you might end up with is a sort of convergence on a super app. So you might end up with sort of like a Revolut type app that sits above everything. It's taking some information from the banking world and it's taking other services from a crypto exchange and it's creating a single viewpoint of it, but they're not necessarily integrated behind the scenes because it will come down to traceability, taxation. These things will drive whether or not the government authorities are happy with those two worlds being so easily interoperable. That's just my personal view, but I think until we see better solid regulation around how to handle these cryptocurrencies, the regulatory interest in open banking with it will be defensive.
Okay, perfect. Before I close this session, I would like to basically ask Mr. Shahzad Malik, the Vice President of ICMA, for having his concluding remarks. And thank you so much again, all the panelists for their contribution, for their thoughtful discussion and presentation. Wonderful, guys. So over to you, Mr. Shahzad Malik.
Thank you, Dr. Farooq sir. Mr. Liz from UK's Syed Sohail Javed, Director Payment Systems at State Bank of Pakistan, Mr. Campbell Murray, founder Sockbox UK, Mr. Asif Zaman, co-founder and CEO Alif Technologies UAE, Mr. Riaz Chunara, MD NIBAF. Distinguished participants of the webinar, ladies and gentlemen, Assalamu alaikum and good afternoon. I congratulate to Alif Technologies and the NIBAF for jointly organizing this wonderful webinar on this important topic of unleashing the potential of open banking. ICMA Pakistan is privileged and honored to be the knowledge partner of this webinar. I am sure that the presentation made by the learned speakers would provide useful insight to the participant on how open banking can benefit Pakistan economy and the rest of the world. Mr. Liz has presented a very detailed manner about open banking and its history and development. And Syed Sohail Saab has shared the role of State Bank of Pakistan as regulator and to formalize the framework to safeguard the customers and businesses. And with his experience, I would say the State Bank can implement policies and finalize the standards and its governance. And ICMA Pakistan is always available to provide its services and assistance wherever needed. Mr. Campbell has presented a wonderful and shared his valuable experience with us, and UK would always be a model for us. Here I would say that open banking is becoming a reality and it has much potential in Pakistan, where it is still in its infancy stage. Unlike UK and European countries, where the concept has revolutionized their economies, in Pakistan, open banking has so far a more limited focus on mobile and digital wallets. So I think that concentrated efforts are required to be taken to unleash the potential of open banking in our country by all our stakeholders and regulators. State Bank of Pakistan and other stakeholders needed to play a vital role by developing and implementing an action plan with the specified time frame to promote open banking for an enhanced level of financial inclusion in Pakistan. The fact of the matter is that the Pakistan has only 13% financial literacy coupled with limited banking transactions. There is also a low volume of electronic transactions mainly due to countries' infancy in terms of digitization of its payment infrastructure. According to the World Bank Global, an estimate of 100 million of Pakistanis are presently unbanked, either lacking access to financial services or choosing not to engage in the formal economy. In early this year, launching of new instant payment system by State Bank with the title of RAS would help stimulate financial inclusion and enhance the country's existing digital infrastructure. The new platform would provide the people and businesses sectors the facility to send and receive real-time payments. It is expected that subsequently the government may also run its social funding and aid program fully through the RAS program, including salary disbursement and to public sector employees. It is hoped that the such revolutionary steps for digitization undertaken by the government, the country will not only achieve a high level of digital delivery of financial services, but also widen financial inclusion to at least 50% of the adult population. There are immense benefit of open banking of Pakistan consumer definitely, and which we have just learned from the learned speakers. Better money management, the customer will be able to connect different bank accounts, mobile wallets, and other financial services products under one dashboard. Hassle-free lending, individuals and small business can have easy and limited time access to all of their financial history to a lender instead of undergoing a lot of manual work to provide information. Quick payments, online payments would become quick and cheap by just authorizing the payment, and the bank or wallet authenticates it directly, which would remove the role of middleman like Visa, MasterCard, etc. One point that I want to highlight here for the speakers and participants is that open banking could lead a security risk as we are discussing, and most of our questions are also on the security risk as the banks have to open their applications programming interface APIs. On the third-party fintech companies, hackers can target third-party applications. It is important that we must design a foolproof mechanism to protect and safeguard not only for the consumer interest, but also to save bank and financial institutions. With these remarks, I thank the organizers for inviting me as a guest speaker and providing me the opportunity to share my views on open banking. I wish all the success to the program and look forward to some useful insight and deliberations and other information that we needed to our participants. Thank you very much and stay blessed. Thank you.
Thank you so much, Mr. Asif.
Yes.
Would you like to have?
Yeah, before that, Ms. Alia, do you have any comments? And second thing is that there's a poll for understanding. If somebody have not taken part, please, we will closing the poll. Did you understand the concept of open banking? Alia, please, do you have any comments?
Yes, thank you for providing me this opportunity, Mr. Asif. Yes, I would like to add that the trend towards open banking is here to stay, and it's transforming into a full open finance system with each passing month a new API integration. John Craig, former CEO of Deutsche Bank, said, "In our bank, we have people doing work like robots. Tomorrow, we will have robots behaving like people. And accountants who spend a lot of time basically being an abacus will be replaced by machines." What we are going to see in open finance and open accounting evolve in exactly the same way as we are seeing open banking today. We are moving to the world of pure automation as money is spent through apps. The apps send details to accounting apps, and the accounting apps keep the record automatically. As bank activities occur, the banking services via open APIs, updates the accounting apps. This is the move that is fantastic for the business. And automating manual processes make them cheaper and more efficient if done right. Well, summarizing, there are three pressures that is moving this industry open model, that is consumer expectation of mobile ease, big tech and fintech competition, diverse changing global regulation, and the fourth one is that even we have different region sectors, different regulations, but the COVID-19 has expedited this open banking services. And there are three factors that will drive the open data economies. And the banks will thrive who will build capabilities to aggregate and extract insight both internal and third-party data using advanced technology tools as analytics, artificial intelligence, and machine learning. And secondly is the building meaningful, relevant customer experience. And lastly is the customer information is safe and secure. API security and customer protection, I think, will be the major priority as bad actors try to identify and potential weakness in the bank's offering. So banks have to be, what I think is the most important is that they have to be vigilant about the authenticity of customers and service providers. And they have to keep a balance between the risk and the growth, that customers are not impacted with there is a ease of use and they get right balance. That's what I would like to add. Thank you very much.
Thank you very much, Alia, and thank you very much. I want to thank everybody, the participants and the speakers, Campbell and Leslie and Mr. Suhail and Mr. Shahzad Malik. I just want to share an important thing is that one, I'm very much happy that people have given feedback that around 40% of the people, they understand clearly what this webinar was there, and 47% partially, and it's a big success that even in this limited time that we are able to deliver something which is notable and understandable. And I thanks State Bank of Pakistan, BaaS, Mr. Riaz Tunara and his team for collaborating with us for this webinar. And I'm thankful to ICMA Pakistan as a knowledge partner for us, and hopefully we'll be doing more of these kind of technology trend webinars. And thank you very much again to Les and Campbell. To you, Dr. Farooq.
Thank you so much, Jazakallah Khaira, and thank you for participating. I again say thanks to NIBAF and also ICMA Pakistan, State Bank of Pakistan, and also our respected speakers and guests. Les, Campbell, wonderful job. Thank you so much.
Thanks.
Thank you, guys.